Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar, and today we're going to be talking about a kind of fund which is definitely one of the hottest and most in demand since the last several months. In fact, in the last 12 months or so, these kinds of funds have seen a substantial surge in the money coming in. We're talking about thematic funds. 31% of all inflows have been in thematic funds, over 70,000 crore rupees in just the last 12 months. Now, why are we talking about it today? And what are the concerns? Well, concern number one is that when you're looking at markets at all-time highs, like we are right now, do the risk factors for thematic funds grow? Because remember, these are funds focusing on very specific and narrower ideas and sometimes require action from the investor to rotate out. Would you be missing the bus is the question. For a market that is in a bull run trajectory and at all-time highs or nearing all-time highs, are you safer off in a diversified fund? That's the essential question that we're placing in front of our guests today. And to speak on this, I'm joined by Kshitij Mahajan of Complete Circle Wealth Solutions. Mrin Agarwal of FinSafe India is also with us today. Welcome to both of you, and great to have you on the Mutual Fund Show as always. I'll start with Mrin. Mrin, just your opening comments on the theme that I have set up, the context I have set up in, in the beginning of the show about thematic funds, why they're popular, and why should we be talking about them right now?
So good afternoon, Tamanna, and thank you for having me on the show. Well, I think, firstly, I think investors are very taken in by the narratives that one is seeing around certain themes, let's say, whether it's defense, PSU, manufacturing, right? And again, the risk appetite has also increased, and the fact that people are thinking that, they can make returns like how they are making in mid caps and small caps. So I think it's really a question of the narratives that one is hearing around these particular sectors or themes that is getting people to really invest in these funds, of course, also driven by the fact that some of these indices have shown very good performance as well.
All right. Let me take that to Kshitij as well. Kshitij, thematic funds, first of all, let's start with why they're so popular.
Good afternoon, Tamanna. Good afternoon. Thematic funds. So normally what happens, Tamanna, when you have ongoing rally for last 4 years, which is going, and people see that, normal mutual funds are giving return, how we can trade some additional delta in the portfolio. So you end up buying, some different category of funds where thematic or maybe sectoral funds come into play. So I think why it's getting popular, because it is a better way of playing a sectoral theme rather than just playing a sectoral theme. You end up buying a theme on which you are bullish, and you end up getting into 3, 4, 5 different sectors. Let's take, for example, let's say you're bullish on housing as a theme. Now, housing is a bigger theme, but you when end up playing on a housing theme, you will have cement, you will have steel, you will have security systems, you will have pipes, you will have tiles, you have different various other sectors which comes into play. Similarly, let's say if you are bullish on a theme which is like a power theme. Now that includes power generation, power distribution, that includes clean power companies like company like your Praj Industries, which is working on ethanol side of power. So there are many different things which as a theme you can buy when you have a thematic fund, which restricts you for doing that in a given sectoral allocation. So I think that's why these set of funds are getting popular, and you have seen the type of flows which you have mentioned in your initial opening statement. So I think it's a better way of playing and creating some additional delta vis-a-vis your flexi-cap or multi-cap funds.
Okay, so that's why people are interested in thematic funds, and frankly, look at the whole rush of NFOs and new products that mutual fund industry is also launching. A lot of them are thematic funds, whether it's EVs, defense, public sector companies, everything that is in focus. Now, let's talk about the risk factor over here, Mrin, and I'll come to you on that. And I mentioned this briefly, but the fact that markets are right now at all-time highs, does it become important to rotate out and to look at thematic funds more closely as an investor? you have to pay closer attention than you would, for example, to a diversified fund. Would that be fair to say?
Yes, absolutely. Because in thematic fund, you are basically betting that the theme is going to work out over a period of time. So certainly you do have to watch out as to for the exit signals, or you do need to have an exit strategy in place. Certainly, these are not meant for long-term investing. And the reason for that is that, when you look at sectoral performance every year, the best performing sector keeps changing, right? So even if look, I'm sure that even if we were to plot the themes every year, the best performing theme is also going to keep changing every year. And hence, for most investors, it actually becomes really difficult to figure out, when do you actually exit, and especially if, the theme doesn't perform well. So the classic example is, of course, of 2020, where pharmaceutical stocks did really well, but that was not the case in 2021 and 2022. And most investors who got into these pharma funds were not sure as to what to do. So I think, the very important thing in thematic funds is really that the theme needs to play out on several aspects, right? So first of all the stocks need to work out in these funds because they are certainly concentrated, right? And many times all the NFOs that you see come after the theme has already given some really good returns. So, markets may have already priced in this particular trend. And the fact is that this theme should actually play out in the future, right? So it could already be that a lot of it has already played out and there's very little steam left. So there are certainly a lot of risks involved, and hence you do need to ensure that you are exiting, you are certainly planning for the exit at the appropriate time.
So how do you stay aware? How do you stay aware on thematic funds, Kshitij, and how do you make sure you're not trying to catch a train that has already left the station? If there is now a new fund on a theme that's already run up, you're not late to the party.
So first, I think the allocation which one should look at, going towards thematical, or I say that tactical allocation is 10-15% on a higher side. Second, as you said, when you already have a theme which is playing and now you have funds coming, one has to actually look at the gap between the valuation and the earning numbers which are coming, which I'm sure is not possible at investors' end. So what you can do is look at the type of performance this sector or this theme has given in the past, and look at the longevity of sector, which is doable. Take, for example, if let's say government focus is clearly on defense and manufacturing. So now normally the sector which you feel looks like to be a sectoral fund on the manufacturing side, it can become a long-term evergreen sector also. Because when you are stepping up your manufacturing capabilities, then you can see that maybe it's no more a sector, but it can be a long-term allocation also. But on the defense side, when you see there is a reasonable, not reasonable, but a sharp movement in last couple of years, and right now if you're looking at participating in a defense fund, then you have to just pick your bets rightly, because whether you are at a peak of a cycle or you still see that some right news coming on your way about the business which you are buying in the underlying sector. This is just an example I'm saying. So I'm saying, yes, I totally echo with what Minal is saying, that, if you are almost at the peak of a sector, then you should try to refrain away from investing into that fund. And as you asked, nobody knows what is the peak of a sector, but yes, if there is a sharp movement already in that theme or sector, then one can refrain away from that sector. But if you still feel, and you can talk to the right people, that there is a lot of juice left in that sector or that theme, which you want to buy or get into, then one should look at that. Can this be a long-term investment for you or not? Just like I said, manufacturing, I feel, can be a long-term investing for people as a theme, because India is starting up. It's building a manufacturing base in a very strong way, and we are targeting 45% of contribution to GDP by manufacturing in next 5 to 6 years time. So just example, there is no sale of a manufacturing fund here, but yes, this is just example.
Okay, so manufacturing is a good example. Let me come to you, Mrin, on that. What are the examples of thematic funds or the top thematic funds which you think are worth looking at right now? What is the kind of allocation you should have to thematic funds? Should it be part of your core portfolio or more of a satellite or a secondary portfolio? Give us your views on some of these points.
Well, firstly, I don't recommend thematic funds at all. And the reason
Okay.
being, they're extremely concentrated. And the point is that whatever are the high conviction bets from these themes are anyway going to be there in the broad-based funds, right? So, you don't really need to have this concentrated bet. You can play it through the existing broad-based funds, which could be part of the core portfolio. That said, of course, if there is, you believe in a particular theme and you want to take some concentrated exposure, of course, you can look at, up to, let's say, 5 to 10% across these themes, not in one particular theme. But, I think for that, the investor really needs to have very high conviction on this particular theme and possibly a good amount of, domain expertise on the theme to really decide whether to actually get into this or not, right? So hence, I don't really suggest any of the existing thematic funds. Also, when you look at the past returns, right, of thematic funds, and see, for an investor today, you can decide to do a thematic fund, or you could decide to just go with a Nifty 50 index fund or a S&P 500 fund, right? So BSE 500 fund, for example. So, when you look at the way the returns have done, and also when you look at things like downside capture ratios being very high on these particular funds, that's another reason why I actually don't recommend investment in these particular funds.
Okay, that's a very clear stance there from Mrin, that no thematic funds, you don't really need them. Would you say that, Kshitij, or you'd make some exceptions?
So I respect what Mrinal is saying. All I'm saying is that some themes which looks evergreen now, like
Ah.
what we used to call FMCG and banking is evergreen sector or theme, which will always remain. A country where which is growing at a nominal GDP of 12%, you'll see BFSI will grow at 15%. So I'm saying right now, your banking as well as manufacturing looks like to be an evergreen theme for me from here onwards. So we don't mind allocating some funds on the banking side or on the manufacturing side for clients who understand that if there is additional delta, there is additional risk also when you get into a thematic side of funds also. That's why you restrict them to 10 to 15% of their overall allocation in their portfolio. But yes, these two themes looks like good. Other themes which are there in the market, with all due respect, I see that there's a massive valuation mismatch, whether it's PSUs or whether it's a defense. There's a valuation mismatch which one has to look into uh, before investing into. But yes, there are certain pockets there also where you still have some headroom remaining for you to grow.
Kiran writes in to us, aged 42, and the goal is to create a corpus of up to 1 crore rupees. They write that I have a 7,000 rupee SIP in 3 funds and want to invest 20,000 rupees additionally per month. Can you recommend a few funds? They've also shared their current investment program, Quant Mid Cap, Quant Small Cap, and Parag Parik Flexi Cap. So pretty much everything is covered, I would say, Mrin, but if there has to be an additional bump up, which is a substantial one, going from 7,000 rupees to 27,000 rupees per month, where should this money come in?
So already there is a flexi cap, mid cap, and small cap, and I think one of the things that they can possibly do is to add in an index fund, maybe like the Nifty 50 index fund of ICICI, and then maybe look at spread out some allocation among the existing funds itself. Of course, I think between quant, mid cap, and small cap, there would be a good amount of overlap of stocks. So maybe like just choose one of those funds instead of both of them.
One of those funds instead of both of them. Kshitij, let me come to you. Where would you put an additional 20,000 rupees? Does it make sense right now to look at a large cap fund?
Audible?
Sorry, a large cap fund. Does it make sense to look at a large cap fund for these additional investments?
So I think index fund can be looked at, and what one can look at is I think next Nifty also you can include. But one request, if she's already having SIPs going in quant funds for the time being, if we have some issues going on about some investigation going on, they can stop the SIP for the time being. There is no need to redeem that money. Just let the money lie there only, and add one Nifty index fund and couple of flexi cap fund is what I advise, because this is something this might take some time, this entire inquiry. So I think one can look at Nifty 50 or next Nifty 50 and choose one of flexi cap funds, good flexi cap funds option which are available in the markets.
Okay, more flexi cap funds is something you can choose. Sham writes in, aged 20, says, I want to invest 2,000 rupees a month in mutual funds for the next 1.5 years. Can you suggest a few funds? First of all, congratulations, Sham. You deserve a separate award at the age of 20 to be thinking about investments in mutual funds. And the fact that you're starting from 2,000 rupees a month, that's fantastic. I don't know, why just 1.5 years? It's something Sham can't answer right now, but if you're watching, please write in and let us know. Mrin, one assumes there should be a longer term investment that begins for a 20-year-old. They're just starting out. But if I were to just guesstimate and say that this is for a specific purpose that Sham wants to invest in, and that goal accumulates in 1.5 years, then what should be the right options? A little more aggressive, perhaps?
Well, I think he should look at ultra short duration debt funds or arbitrage funds or a combination of both, simply because equity funds are going to be too volatile in that particular period. And the same hold goods for balanced funds as well. So my recommendation would be an ultra short duration debt fund and an arbitrage fund. The arbitrage fund simply because he does have the 1.5 year time frame, and it does give you a tax advantage as well. So I think combination of these two would be good.
Okay. What would be your advice, Kshitij, for Sham?
One is if he is looking at redeeming this money after 1.5 years, I echo what Mrinal is saying. But if he want to invest for 1.5 years and want to continue, that corpus for long, then he can look at focus fund or a multi-cap fund because he's young. He can look at a focus fund and a multi-cap fund. But yes, I'm very happy that someone at 20 years of age is thinking about investing in a mutual fund. Congratulations to Shyam. At the same time, just to make understand power of compounding to all our viewers, if you are investing 2,000 rupees also and you invest for next 30 years with incremental support 10% every year, you end up making 1.76 crore in 30 years if you grow your money at 12% also only. So I'm saying that's a power of compounding. What type of corpus you can create with 2,000 with 10% increment every year. So Shyam, if you're not working, as and when you start working, I think look at a wider spectrum of 3-4 good mutual funds on multi-cap and flexi-cap side and start your SIPs.
All right, Lata Venkatesan writes to us. I recognize that name. Lata, I love it that you watch our show and you come in with your queries so often. So you're a regular. Age 64, goal is lump sum returns. And she asks, can you explain the term IDCW? Can we switch our existing funds from growth to IDCW? Is this beneficial for senior citizens? Goes on to say, I invested 61 lakh rupees. Am I reading that correctly? Yeah, in total in ICICI Fund and HDFC Balanced Advantage Fund. Now, IDCW is a scheme where you can withdraw money in a consistent fashion from your mutual funds, but I'll leave it to Mrin to explain this and why this is a good option for senior citizens. Let me just add one more layer to that. How do you compare it to an SWP, a systematic withdrawal plan? Which one works better?
So ICDW stands for income distribution cum capital withdrawal. And, so it's a form, like, to say it in a more layman language, maybe dividend is an easier way for people to understand it. So you can switch from growth to ICDW, but remember that when you do the switch, there will be a tax implication because it is a switch from a fund with one NAV to a different NAV, and it's a different, like, they're basically two different funds, right? Since they have different NAV, so there is going to be a tax implication if you do intend to do this. Now, I'm presuming that both the funds that you're having are balanced advantage funds. And the thing that you need to remember is that if you're doing this to get regular income, then you must remember that whether it is balanced funds or equity funds, while they do declare dividends regularly, there is no fixed thing that you are surely going to get that dividend or not, because it all depends upon the performance of the fund. Unlike the case of debt funds, where you do have more surety of getting a regular dividend, even though that amount is not going to be like a guaranteed fixed amount, right? So, what I would actually say is that ideally, if you are looking at trying to generate a regular income from these investments, it should ideally be done like a systematic withdrawal plan from debt funds, right? So what is the difference? So ICDW is basically like a dividend that gets declared, whereas SWP is a systematic withdrawal plan where you are withdrawing units from your investment. And you can decide whether to do it on a fixed amount or a fixed number of units, basically. So that's what the difference is.
Okay. Okay, and in terms of an option for senior citizens, she wants to know if she should switch out from a growth fund into the IDCW option. What would you say to that, Mrin?
Not on the balance fund, right? Because they mentioned it's not going to give you that, you don't have that surety that there's going to be a dividend that's going to come out every quarter.
Okay. Kshitij, let me get that question to you, and I think I'd like to know your version also of how you would describe these funds. Are they popular? Should it be an option everyone should look at?
So, Tamara, I think the only difference for what Vinod has said is that if you don't have a tax liability, or let's say if you're not in a tax lab, then you can look at a dividend option. And if you don't, need regularity of income on a monthly basis, because if dividend is like taken as full tax now, it's on the tax slab. It's like your interest income. So then there is, if you don't in any tax slab, you can look at a dividend income as an option. But if you're in tax slab, I think tax-wise also SWP any day, and regularity also wise also SWP any day is a much better tool. It's actually a tool which can make things much better for you in terms of your monthly payouts. So I think SWP is something which has been looked up by many of the retirees clients for in our scheme of things also. And it's a beautiful tool where you can decide on whatever amount you want to withdraw on a monthly basis, and you can plan your things so that your investment still keeps on growing and still you keep on enjoying the fruit and benefits of the returns.
All right. Very quickly, let's quiz in one more query before we have to wrap up the show. This is a question from Rabi Lal Chetri. I hope I'm saying the name correctly. 35 years of age, goal is high returns. Says they are currently investing 10,000 rupees a month in SBI Energy Opportunities Fund, direct growth. Wants to know if it's the right fund or should they diversify my portfolio further. I mean, a one fund portfolio, I think is, and that too in a specific theme like that. I don't know, Mrin, what would you suggest?
Well, I think he himself has a doubt on it, right? So I think certainly he needs to diversify his investment.
Yeah.
As I said, I'm not in favor of themes at all. So I would actually say exit this and look at restarting a SIP in a more diversified fund. I mean, of course, since your goal is high returns, you could consider small cap funds, provided you can take the risk. Otherwise, you have mid cap or flexi cap categories available. But certainly, you cannot just have one fund in the portfolio. You do need to diversify. And by diversifying, you mean diversify among sectors and stocks. So certainly do not look at thematic or sectoral funds for the same.
Don't put your eggs in one basket. Don't put all your money in one fund, and perhaps not a thematic fund if you want to just choose one. We'll have to wrap it there, but thank you so much, Kshitij and Mrin, for joining us today. And for all our viewers, thank you for tuning in. If you want to write in to us, you want to hear the answer to your queries from our experts, all the numbers on your screen. That's all the time I have today on the Mutual Fund Show, but stay tuned. A lot more coming up on the other side on NDTV Profit.